So let's understand how can derivative data help you make more informed decisions. So let's understand very simple things first. So let's say there is a stock which is moving like this on a chart. You are looking at the price action, and let's say this is how the stock behavior looks like to you. Now what happens is that whenever the stock is moving upwards with lack of open interest, that indicates what? That this entire up move, it is not confidently participated by the participants who are trading in the market. That means what? That means that they are not expecting this up move to sustain. There is a up move in the market which everybody is seeing it, but nobody is ready to participate. Now just ask yourself a question: why will someone not participate when there is an up move? So the answer to that is very simple, that participants are afraid in buying a stock which is moving upwards because they are expecting that this up move may not be legitimate, it may not sustain higher. And what happens is you might see that the stock might collapse from that. So these are the false moves which we need to be careful about. How can we do it? We can do it easily using the built up tool in the application, which will help us in validating many of such moves. Okay, it will filter us out many of such fake moves which are happening in the market and will only show us the moves wherein a lot of participation exists. So I'll show you, but we will take it one by one. There will be more data points ahead, so stay tuned. Okay, so now I'll show you first one example. So I'll go to future OIH. So this is built up tool in the application, which will show you on what day what built up has been witnessed. Wherein the green color bars are showing us long built up, that the price and OI went up. Red color bars are showing a short built up. There was a short day in the market. Blue are showing a long unwinding. The longs which are there in the system, they are cooling off. The profit booking thing of the longs. Short covering, yellow bars, which is nothing against the shorts which are there in the system. Those are getting covered. Okay. How we are going to use this when we are trading, I'll tell you, but first understand one example, what I'm trying to say and what I'm trying to show. So for that, I'll take you to not very old example, but slightly older example of Bajaj Finance. Okay, so let's say this should be okay. Yeah, so this is what I was talking about. See, you see the complete short covering move in Bajaj Finance. There were a lot of shorts in Bajaj Finance from here in 3-4 days. The up move. So by the way, the black line is showing us the price. What is happening over here in Bajaj Finance? There is up move in Bajaj Finance, but that up move is not backed up by additional participation. And this is what I meant when I was drawing that. That if there is an up move in the market, it has to be participated, it has to be supported, it has to be backed up by additional participation. Only then it makes more sense. Over here, if you see this entire up move, it has no open interest addition whatsoever. So there is no support. The OI support is lacking in this. And eventually what happened over here in Bajaj Finance? Straight away the stock falls from 6,500 levels to making a low of 5,500 levels, 5,600 levels, right? So which is a very big fall. Because why I'm showing you this is because obviously you will not be able to identify the stock on this very day itself, correct? How can you identify something which is at the bottom? A lot of technical indicators of yours will show you a sell signal in this because the stock is consistently collapsing, right? So you will get more probably the buy signal in Bajaj Finance somewhere over here, right? Maybe after 2-3 trading session, because that's how it will work. And then eventually, if you see, you wouldn't have got a lot of things. Even if you would have made money, it would be very less. But participants who would have lost, they would have lost significant chunk. So before you take any trade, always validate the trend. Is there a clean trend which exists in the instrument? So for that, all you need to do is just search for your favorite instrument wherever you're trading. So let's say I am trading Nifty. Just check out what's happening. So over here, what's happening? A lot of reds and yellows, which means there are a lot of bears active in the instrument. A lot of greens and blues, that will indicate a lot of bulls active in the instrument. Just check this out. From 12th of April, no major short happened in Nifty. See, since that day, Nifty has moved from 17,600 to making a high of what the close of market was today, 18,287. So, which is huge rally, right? You would have captured this rally easily. Now, this is the first step. So, what we conclude till now is don't participate in the moves which are not backed up by OI. If the prices are going up, more long should come in the system. If the prices are going down, more short should come in the system. Only then it will make more sense to go ahead and participate or move something like that. So now, how can we go ahead and easily check that is there a bullish trend or a bearish trend in the instrument? Simple, we will come to future over here. The link would be in the description box below, also in the iCard over here, and just check, are there more number of greens or are there more number of reds? So you can clearly see in Nifty, there were more number of greens, and the Nifty has consistently moved upwards since then. This is the first step. Second, if it is red, obviously it is the bears were active. So now if you just come on absolute OI, check the size of the bar. What it is trying to tell you? It is trying to tell you how much absolute shares were added or unwinded on a particular day. Bigger the bar, more the quantum. Smaller the bar, less the quantum. So over here you can clearly see the 19th April short was very marginal, very negligible. So this short has no significance as such. Yesterday also there was a short built up in the market, but just check the quantum. Hardly any positions were created yesterday, which means that the dip which was yesterday, the dip which happened yesterday, people are not ready to participate, which means they are expecting the existing trend to continue. So this is the first thing that you should typically do, or I would say I at least do whenever I am trading the trend. Now, what if I want to identify those stocks which are in a trend? So simple, just go to built up cycle and just search for the stocks. Okay. Look back period 20. Reading, that means what you want to find. So I'm saying I want to find long and long unwinding. Then the analytic will ask you how many days of long unwinding you want to find, and just hit apply. Okay. So all these are stocks wherein the bulls are very much active. So again, you can pick up any of these stocks, analyze it in future OIH, and you can probably pick up one or two stocks from this particular analytic. And obviously, if you are doing some technical analysis, you can back it up by technical analysis as well. Okay, so that's how you can go about it. So another thing is, apart from this, you can also check the options data. That is, are you buying very close to the highest call? Are you buying very close to the resistance level? Are you selling very close to the support level? So, just be cautious about those things and you will be informed trader. So let me just summarize. Only thing is, if you are buying, look for more number of greens. If you are selling, look for more number of reds in historical build-ups. The crux is, you can back it up with technical analysis and avoid buying exactly where the resistance is. Let the resistance get taken out, and avoid selling exactly where the support is. Let the support get taken out. Okay, you can use the option chain data for doing the same analytics. So do check out built up and take informed trading decisions for your directional trades using the derivative data.